What is up, guys? So I think we're all good to go. It feels good to be back with my mic and back behind my proper setup. And I think this video that I'm going to record right now is very necessary because the markets are bleeding, especially alts. Bitcoin is not doing that much, but alts are for sure bleeding. And I think as we speak, a lot of people are getting stopped out of their positions or are panic selling. And I hope after this video, you guys have some clarity on where we are at in the market and what we can expect going forward, right? So I'm going to start with going over Bitcoin because in the end, everything ties down to Bitcoin. If Bitcoin is not going up, your alts aren't going up as well. And then from there, we will flow into the altcoins. You guys have suggested some altcoins underneath my tweet, so I'm going to go over those, but I'm also going to go over some coins I want to go over myself. So let's just immediately start, and let's start really going from macro to micro, okay? Because they say when in doubt, zoom out. So I have the Bitcoin chart on my chart right now, and if we look at the previous cycle where we had that double top, we can clearly say that we had that range effect going on here, where this double top was just a deviation of the range high. We broke some structure back inside the range, and we had that full rotation down. Now, if we extend the range over to the right, you can clearly see that we had a nice power of 3. The proper bear market was a nice manipulation phase of this good PO3 play. So the PO3 is where you have your range, then you have your manipulation below the range low, trapping retail traders thinking Bitcoin is going to 10K, and then you have the expansion to follow, right? Very typical power of 3 play, very known amongst the smart money concept traders, and it was executed beautifully. In that expansion phase, it can take a while before it starts. It can fart around a bit, but once you have that proper acceptance back inside the range, you want to see that aggressive move up. That's very typical for a power of 3. Okay. Well, in general, something cannot go up as aggressive like this forever, right? Especially in a PO3, what is very typical is that, you hit your target, which is the range high, and then from there, you relax, you cool off. The market has just pumped from 28K all the way to 72K in a matter of 2 months, or a few months, I should say. Just going straight up. So what can you expect? You can expect some sort of consolidation, and then from there, if price is intended to go higher, you break out. If it is intended to have a proper distribution and a retrace, you will distribute from here. But in general, this is all that we're doing. We had that nice PO3. We hit the target of the PO3, which is the range high, and now we are cooling off. That's it. So I see a lot of people talking about the potential of this being a triple top. Okay. I can tell you guys with a lot of confidence that a triple top where the distance between tab 2, which is this tab, and tab 3 right here is this big. That's not good for it to be called a triple top. If Bitcoin came up here and then put in something like this, I will call a 1, 2, 3 Wyckoff Model 1 distribution, and then we go down from there. But having a range deviation followed by a PO3 and now hitting its target, this is not a triple top, okay? From a timing perspective, it's just not good. It's just not good. So the more posts you see about triple tops, the more bullish you should get, because from my experience, a triple top like this, it's not it doesn't work good if the distance is this big. Because you have to realize, okay? Think from a smart money perspective. Think from a market maker perspective, okay? You're telling me that market makers got involved right here to short price down, or to push price down, right here. That makes sense because price just went up. Maybe they bought here on this dump and they're selling at the top, okay? They pushed price down and then they made price come back up to fill more positions, sell more positions, maybe even short the market and then push price down. Let's say, how much was this? Like 76%? Yeah, there you go, around 77%. You're telling me the market maker who filled his short positions on these two highs pushed price down 77% and then made price come back up another 350% to their entries just to fill more shorts and push it back down all the way again? It doesn't make sense. It does not make sense at all. The people that shorted the markets here, the market makers that shorted the markets right there, yeah, they already took profit down here. These two, I don't know who the market makers were, but the people that made Bitcoin distribute at these highs, deviating these highs, they're already out of their positions right here when they push price down 76%. They will not make price come back up just to short again to push it back down again. It doesn't make sense, okay? It doesn't make sense. Think logically. They already dumped the market 76% here. They are not in those shorts anymore. So for you to call it a triple top, what do you mean triple top? These two tops already did its thing. They pushed price down 76%. This is just a new top, okay? So, in my opinion, that already debunks any case of this being a triple top. So, from looking at it from a market maker perspective, it doesn't make sense. A timing perspective, it doesn't make sense. And then in general, triple tops, if they're not close enough, they just don't work properly. Especially if now you have that beautiful PO3 that we had going on. And I know from experience that when you have an aggressive move like this, price likes to consolidate a bit before heading higher. I am not worried at all about this being a full-on range deviation of this bigger range and then coming back down. But if we keep looking at this from a range deviation standpoint, because we are still inside the range, right? There is nothing for you to worry about until you start losing structure from the low up. Right here, you deviated the range high. The only way to confirm a range rotation all the way back down, yeah, towards the range lows, is if you break structure from the low up. Structure from the low up on the weekly time frame goes like this: low, high, higher low, higher high, higher low, higher high. This is a wick. This is not a break. A wick actually confirms that this high failed to take out this low properly, making it weak in nature, and then you have your higher high, higher low, and this is a straight shot up, higher high. Okay? So as price is looking right now, there's nothing for you to worry about this being a range deviation until you start losing this low, which is around 38.5, okay? That's just talking about this from a range deviation and a weekly time frame perspective. This changes, it's very important, this changes if price takes this high. Because if price takes this high, this becomes your new weekly low. Okay? So that's something to note down and to be aware of. But for now, we have took out the previous all-time high. If you just compare cycles to cycles, it's very normal to consolidate here. Every type of perspective on crypto cycles work or align in this consolidation making sense. Because from a smart money perspective, yeah, we just had that PO3, so it makes sense to consolidate. If you just compare crypto cycle to crypto cycle, every time price reaches previous all-time high, we ranged for a bit before going higher, you know? So everything is aligning, and there's nothing to worry about. Especially if we start zooming in this range and how this range is developing, okay? The initial range was right here. This was the initial range. You had your range low, you had your range high, okay? What happened is that we had that first sweep of the range low. These 3 sweeps, I just count them as one. You know, we actually called this model 1, and that move up was an amazing long play. But let's see this move as one sweep, because if I go in the 3-day, you can clearly see that this is just one boom, one sweep, okay? So we have our range, we have our first sweep of the range low. We extended to the new low, and look at that, we have our second sweep. What is this indicating? Your initial range low, your first sweep, your second sweep. This is very typical for, and you guys know I love my Wyckoff, a Wyckoff Model 1 accumulation. Let's copy and paste it over. Boom, boom. Oh, that's the wrong one. SC/ST spring, your range low, your first sweep, your second sweep. SC/ST spring, SC/ST spring. Okay, right? This is even your test. You go back here, you have that test or that LPS. It's just a higher low after the spring. Right here, you have that higher low after the spring. So it's looking like a very clean Wyckoff Model 1 accumulation schematic. Okay. And the target of this Wyckoff accumulation schematic is the range high. I've also stated previously that this Model 1 for Wyckoffs to flow over into different Wyckoff schematics. Meaning this is a Wyckoff Model 1 schematic, okay? Your 1 tap, your 2 tap, your 3 tap. And you left behind this nice looking range demand. I've been having this range demand on my chart ever since we pumped from here. So that's literally around a month now, okay? I stated that maybe price, when we were ranging here, is not ready yet to move away towards the range high, and it comes back for this extreme demand. Why do we call it extreme demand? It's the last demand remaining before taking the low, because right here is just liquidity. Right here is just liquidity. So this is really our last point of support, okay? So thinking from a market maker perspective, if he started longing here, filled more on these wicks, filled more on this manipulation phase, pushed price up here, maybe he didn't have enough strength yet to push price higher, so he makes price come back to demand, fill his last positions, go higher, leaving price with no reason to come lower because all demand has been mitigated. It's very typical. It works on every time frame. I use this on the 1 minute even if I'm actually scalping the traditional markets or the crypto markets, you know. This is just a Wyckoff schematic on the bigger time frame. Then if we look at it from a volume profile perspective, you know, right now we are actually bouncing from the volume area low, but that's also a nice range demand, a bit out of value, meaning it's below the volume area low. But this is just looking like an accumulation schematic. So really price coming down here to 63.5 is very normal. Maybe we accumulate from here and then we tackle that range high. Okay. Now, after we tackle the range high, so price hits the range high, from there it's free game, okay? Because the technical target of this accumulation schematic is the range high. From there we can have a distribution and come back down. From there we can do anything. We can pump away from this range if that's what the market maker wants. But once we tackle this all-time high, it's literally free game. It can develop whatever it wants. I cannot predict what it's going to develop. I can just tell you that right now it's looking like an accumulation. So sooner rather than later, we will tackle the all-time high. This is a very big accumulation schematic that has taken 97 days to form. Normally, from experience, if you have an accumulation schematic this big, yeah, price tends to pump away. But I don't want to get everyone's hopes up, okay? But normally when you have an accumulation schematic this big, it actually has follow through, meaning it will surpass the initial range high, which is the technical target. But once we tackle that, range high, it's free game. And then if you tackle that range high and you start losing this low, which will be your new market structure low like we discussed earlier, that's when you should be worried for a bigger retracement, okay? But also from there, if losing this range low, that takes a while because you'll have to have good breaks below like 50K. So I don't see that personally happening anytime soon, guys, if I'm being honest. Like it's developing pretty nicely. So anyone that has been stressing about crypto regarding Bitcoin, just block them from your feed, because it's causing unnecessary FUD for your brain to understand, because we've literally just been ranging and we've been deviating the range lows, indicating we have been accumulating. It's creating an accumulation schematic. So really nothing bearish on the Bitcoin chart for me, okay? Zooming in here locally, we have been deviating that range low. We filled some of that inefficiency on the left. And we had that local range going on here. But I would prefer just for this demand to get tapped, so we really don't have any reasons to come lower. But of course, we can easily scalp these moves in between. But I want to keep this a bit more higher time frame focused, okay? I will make another YouTube video after this one, actually going over the trades that I took today as a scalper and a day trader, because that's where I make most of my money, guys. I kind of understand how the crypto cycles work as well, but I'm mostly looking at the charts from a purely TA perspective, okay? I'm a trader. I make most of my money trading. So that's why I also care less about what the markets are doing, because I'm just seeing it as purely as an opportunity to invest more money, to get better discounts. My main source of income is trading. If crypto goes to zero, I'll be fine, okay? And that's also the mentality you guys should have. But yeah, to recap it, we had the beautiful PO3. We're at the range highs. We have been accumulating. I would love for this range demand to get tapped. And there's nothing bearish. Literally, there is nothing bearish on the Bitcoin chart. Now, ALTS, on the other hand, ALTS have been having a harder correction. They have been having a tough time compared to Bitcoin. And, it was kind of expected, because I made a post about the TOTAL3 market cap. Let me chart real quick. Cap excluding Bitcoin and Ethereum, so it's mostly the altcoins, of course. And I've had this on my chart for a minute. I drew this around 10 days ago, and I've been following the plan pretty nicely. But what I saw on this TOTAL3 market cap chart is that, again, let's start by zooming out. Also, right here, let me put this in the folder real quick so I don't lose it. Boom. Here. Just like on the crypto total market cap, or on Bitcoin, on the crypto total market cap, you kind of had the same thing going on, where, you had that distribution. And this right here is actually where you see a valid triple top. This is a valid triple top. In my words, a Wyckoff Model 1 distribution. This is the timing that you want to see. Because look at the move that followed. They shorted here, they shorted here, they shorted here. And of course, you don't short this chart, the total 3, but it shows that the altcoins were being shorted, okay? And market makers were filling their short positions. This is what you want to see from a timing perspective, if you want to call it a triple top, or as I call it, a Wyckoff Model 1 distribution. Not where your third tap is here, okay? That doesn't make any sense. But let me get rid of this, extending it, you know. We let me put it like this. We hit the range low, and from there we had a very clean accumulation. And this is also when I started accumulating altcoins, when I saw that this was just, you know, it was just perfection. It's so nice. You had the range low, 1 tap, 2 tap, model 2 accumulation. I think I drew it. Yeah. This is what I drew on the beginning of November 2023. The timing was a bit off. I timed it with the Bitcoin halving, but it did follow the plan pretty nicely. Breaking structure actually back to bullish. So if you grab the structure from the top down within this range, you know, in order to potentially have a full-on range rotation, just like I discussed earlier on Bitcoin from a bearish standpoint, right here, you had that range high, you had the accumulation, you broke higher, and now you have a higher low and a higher high. That's it. So keeping it very simple, this is your area to bounce from for a continuation of the trend, right? Higher low for a higher high. So from a macro perspective, there's really nothing to worry about. But if you calculate from percentage perspective, it's a 32% retracement, right? So ALTS can really bleed in this higher low for the higher high. But in the end, it's still a higher low for a higher high. And right here, looking on my left, what I notice now is that we actually had this supply zone. I think I actually posted about this a while back, which is kind of only the real resistance that we have in this whole move down. Because this is literally the only order block in this whole move down on the weekly time frame. And of course, sellers stepped in here because look what happened after this buy candle. A very aggressive move down, indicating that sellers took over. So it's the only resistance that we have. So I see it as, you know, it's the only pullback, proper pullback that you're going to get on ALTS before we tackle that range high and we pump from there, you know? I really think that the moment we see signs of strength in this box, it's a pretty fast move up. And if you break past this high, I don't see price stopping from tackling the all-time high on the TOTAL3 chart. So, you know, a pullback was expected, tapping into the supply zone. Zooming in after tapping into the supply zone, we didn't really have a proper distribution here. Like coming down like this, leaving every high as a lower high, that's not that bearish. I see it more as bullish because it's looking more like a liquidity curve. However, from here, we actually formed a proper range where you have your range high and you have your sweep of the range high, and then you have your third tap indicating a model 2 distribution. You know, you had to return to zone, and then now actually using the volume profile to check the volume, all the volume was in the upper section of the range. There was no volume in the lower section of the range. That's why on the post that I made a while back, I posted that this was a gap. If there's no volume, there's no demand, and then price will absolutely just slice through it, right? Zooming in, I see right here that we actually have a tiny bit of a range demand over there. So I want to extend my range demand to right here. See, that's actually where we bounced from already. That was the bounce. Okay. So let me just keep it for now right here. Yeah, we're in a crucial point. This is a crucial swing long POI. And once price, or once the TOTAL3 market cap hits its target of the distribution, which again is the range low, I will start looking for signs of strength and a potential accumulation. But, very important guys, a distribution that took 55 days to form will not be reversed in a single day. Just like local tops, local bottoms also take time to develop. Because let's say this turns into a proper Wyckoff accumulation schematic. Let's just say it turns into a model 1. So you have your range low, we come lower, we sweep it, we come back up, then we come back down, we sweep it again, you know, put in the test right here, and then we go higher. You're talking potentially another 40 days from here of forming an accumulation. So you have time. Don't try and catch the falling knife, okay? But I'm pretty convinced that we will hit this range low. I do think if you change the time frame, sometimes the chart changes as well a bit, but I'm just going to keep it on the daily. But if you guys wonder, why did my alts bleed so badly? Well, this is why, you know, the TOTAL3 chart, it said it. But in general, still, we're talking about a higher low for a higher high on the higher time frame. So there is nothing to be bearish about long term, okay? See it as an opportunity. So we have discussed Bitcoin. We have discussed the TOTAL3 market cap. So you kind of know that from my perspective on the markets, you know, we could still bleed a bit more, tapping and tackling that range low, maybe hitting that demand zone before we start properly curving back up again, okay, for that higher low and the higher high on the weekly. So I think this is very good to have this picture on the higher time frames for all the alts and Bitcoin very clear. So now that we go over into the altcoins, we kind of know what the vibe of the market in general is, okay? So, going to my tweet real quick. Let's see. The comments, I already read them, but just to remind me. We have Sight, who said PZ. We have Tau and Caspa. We have RNDR. And we have Sol, Bonk, Ada, Dot, and Avex. Okay, I am not going to do all of them. I'm going to do Solana. I'm going to do Avex. And I'll do Bonk. Cardano and Polkadot. You know, those... I'm going to be honest with you guys, those are coins that performed extremely well the previous cycle. But it kind of has the hype of the previous cycle. The hype for those coins aren't there anymore this cycle, okay? So I want to do Sol, I want to do Bonk, Avex, RNDR, Tau, Caspa, PZ. We're going to do all of them. And then I'll also go over Pepe and some memes as well. And maybe some other coins. But I want to start off with Pepe because I've really, you know, I've publicly been saying that I've been scaling into Pepe on this retrace. Pepe is the only altcoin that I've properly been accumulating heavily on this retrace, okay? And you may ask why. It has the most bullish chart. It has the most bullish chart in the crypto cycle. The way I do my TA, there is nothing more bullish than Pepe. Okay? So let me clarify. Because I've publicly been showing you guys 3 times where I've been longing. Again and again and again. On spot. Okay? Spot longs. So, looking at the Pepe chart, we had the cleanest accumulation down here. The moment I saw this accumulation, just by checking the Pepe chart, I was like, holy shit, this is going to pump. And literally 2 weeks after, we had the biggest pump ever. But it was just so clean, guys. It was so clean. You had your range low. You had your second tab. You had your third tab. Wyckoff Model 2 accumulation on the weekly time frame. All the liquidity was pointing up. It was so obvious at that time. But I wasn't using X. I was fully on Discord, so I have no proper proof of that. I don't know how to find that back, but just take my word for it for now. But from there, you know, from there we pumped higher, and then we put in a higher low for a higher high. Okay, that's it. Just bullish market structure. So let's call this a proper break of structure on the weekly time frame. A very nice break of structure, okay? Then going on the daily, and this I absolutely love, right? It's when you have range demand overlapping each other. And what do I mean with that? Technically speaking, yeah, this whole range is where buyer stepped in because you went lower and then you pumped higher. So it was an accumulation range. Otherwise, it wouldn't have pumped higher. So when price breaks up from it, this becomes support. This whole range becomes support. Okay, it's massive, but it becomes support. When you have a smaller range demand overlapping that line of the breakup structure, which is the top of the bigger range demand, it works extremely well. That's why I was so confident in saying that Andy will not go below 120 market cap, because you have the exact same price action developing. Okay, so I was very convinced, and I publicly said right here that I do not see Pepe going lower than this low. I just don't see it happening that Pepe goes lower than that low. Maybe it wicks it. That's totally fine. But I'm very confident that we will not close a daily candle below that low. Okay? So, because I was very confident in that, if we measure the move from the top down, that's only around a 30% retrace. And if you go all the way, it's around a 48% retrace. So it's between 30 and 48, right? That's nothing. For crypto, most alts are down 70 to 90%. So I was very confident in this POI working. And because I was so confident in it, I have my first spot limits right here on the green demand. Just spot limits because it was a high probability swing long POI. And it was a good time to start accumulating Pepe properly. So, zooming in even, maybe more confident, is the way we came down from the top towards our swing long POI, we broke 0 market structure bearish on the high time frame. Okay? On the low time frame, of course, you always break structure back to bearish. But here, your weekly market structure still pointing up. Your daily market structure still pointing up. Your 18-hour market structure, same as your daily, still pointing up. Your 12-hour market structure, still pointing up. Your 8-hour market structure is the one you broke bearish. Okay? Because you had that 2-candle pullback here, and that's what you broke for the lower high and the lower low. So all the high time frame market structures are pointing up. You came down just leaving liquidity above you right here. Liquidity. So I was just so confident in this swing long POI working, and the most beautiful part is that we actually shorted this high. It was a very nice short. So with the money that you make from that short, you just fill your swing long POIs as well, right? So yeah, I publicly said my first spot limits have been filled. And from here, I was looking for an accumulation schematic to form, right? So we tapped that range low, or we tapped that long POI, had our range low, had our range high. If you zoom in, there you go. Deviated the range high, hit supply right here. Broke back inside the range and had the rotation down. So now your new high is right there. This was your only proper resistance. We have some resistance up here as well, but that can give us a pullback. But at that point in time, you're almost at the all-time high, right? So I'll expect a higher low for a higher high. But from here, what is very important is that I was looking for an accumulation schematic to happen, meaning price will have to deviate this low. If you don't deviate that low, we cannot call it a proper accumulation schematic. So I filled my first longs right here, right? Then I have more spot limit orders below that low. This is all publicly said, okay? Then price swept the low, came back higher. However, we missed this 4-hour demand zone, okay? So there was a reason for price to come back down again. If we think about it from a market maker perspective, there was still demand remaining below us. There was still something to be mitigated before possibly continuing higher. And on the 4 hour, this is a clean looking 4 hour range demand, but within that range demand, you have a more refined range demand right here. Boom. Which is actually a daily order block as well. So on the 4 hour, it's range demand right here. It's a daily order block. So I have my last limits from this low, or below this low on this demand all the way down, like this. Okay, that all got filled there. With limit orders, you don't have to have an exact entry, especially on spot, right? I filled in on this whole wick down. So my average entries are literally around these lows because I've accumulated here and then heavily here and then the most heavily here. Okay? So looking how this range has been developing that we have locally, it's looking extremely nice. I can't lie, it's looking extremely nice because we have our 1, we have our 2, we have our 3. Again, SC, ST, spring, test. SC, okay. ST, spring, and right here, this is looking like your test. So it's really looking clean like an accumulation schematic. However, this is only confirmed, okay, once we break this high. Why this high? Because it's the market structure from the top down that needs to be broken back to bullish. So once we break this high, price will come towards the range high. Again, from there, the Wyckoff schematic has hit its target, its technical target. And it can do anything it wants after hitting that range high. But break this high and come towards the range high. And then maybe from there, we have a slight retrace to fill more demand, and really give us that around the bottom. But overall, I don't see us coming lower than this low. So that's why I've been accumulating Pepe heavily. It has the meme narrative. It's in my opinion the best meme out there regarding if you compare it, to the other top memes like Bonk and Dog with Head and Doge and Shiba. Pepe is very famous and should be higher up the ranks than it is at the moment. But it has a narrative, it has the hype, and the chart just looks extremely good, guys. It's just an extremely good looking chart. And me as a trader, I trade the charts, right? So, yeah. If you guys wonder how I manage a proper retracement filling of my positions, is let's say I have 10 grand, okay? And this is exactly how I did it. But with more money, okay? But let's say I have 10 grand and I want to fill spot limits. Initially, I'll fill 25% on this limit, okay? So I have 25%. If I'm convinced that we're not going to go lower than this low, okay? This is how I manage. We dump down, I fill 25%. I want it to be an accumulation, so it has to take out the low, okay? 25%. Right here. Let me get rid of this to keep the chart clean. Okay. So how I manage is I'm expecting price to not come lower than that point. Okay? At least not break below that low. So my first the first dump, the first limits gets filled right here. 25%, so 2.5 grand, okay? If we have a 10 grand portfolio or a 10 grand allocation towards Pepe. So 2.5 grand gets filled there. We take out the low once more, another 2.5 grand. There was a reason to come lower, and there was no structure being broken back to bullish, okay? Because we failed to take out the high twice. We actually had a nice short from here. But first 25%, second 25%, third 25%. Okay? That's how I did it. 75% has been allocated. 25% is left. The other 25% I will fill once we start breaking that high and breaking structure back to bullish. Okay? Because structure is still bearish locally. Higher time frame, we have that weekly and daily upward structure. But right now, the higher low for the weekly is only going to be put in if we start breaking proper structure from the top down. So that's how I manage. I'm looking where I want to accumulate. I have an expectation of price not surpassing a certain point, and from there I want to see something develop. So 25%, 25%, 25% at the last 25% on the break. That's how I do it. So and you can apply this to any chart, right? If you just have a certain point that you don't want to go lower, and you have your zone between this and this, 25% here, 25% there. Once you see the accumulation, 25% add bullish at the last bit on the break. So I think that's also how big players do it, right? I'm trading with the market makers because Wyckoff schematics, right, are an indication of smart money. People with hundreds of millions of dollars, they cannot fill their position in one go. That's why they wick out the low twice. Because it stops people that leverage long here have their stop below the low. They got stopped out. They long again. They got stopped out. Now they got stopped out twice, so they don't long anymore, and that's when you pump. Typical for a Wyckoff Model 1 schematic. So I'm literally behaving as a market maker, Fill the first ones, sweep the low, fill the second, sweep the low once more, fill the third, enter bullishly on the break to push price higher. It's literally what market makers do, guys. Literally, this is how market makers manage these markets. So that's a bit of a long bit on Pepe, but yeah, I've been publicly saying I've been scaling into Pepe on this dip. I've also been accumulating Andy, but like heavily on Pepe because the chart is just extremely nice. Okay? Now, I'll get into your ALTS. Let's first do Tau and Caspa because I was looking at Caspa myself. I just made a post about it, Caspa is not looking too great. I have to be honest. We, if I get rid of all this, we have been uptrending since the low on this chart on Qcoin, higher low, higher highs. And then from here, yes, you have higher lows and higher highs, but it's barely a new high. And it's a clear range, okay? It's a very clear range. Where this was your initial range high, sweep of the range high, second sweep of the range high, indicating a Model 1 distribution. When do we confirm the Model 1 distribution? If you break structure from the low up between tab 2 and tab 3. So that's higher lows for higher highs right here. So that's this low. So right now I think you actually wicked it. Yeah, so zooming in. Let's get rid of this EQ. Zooming in, you actually wicked the low. So you have not broken it yet. But also looking at this from a volume profile standpoint, once you start breaking this low, you also confirm a break back inside the volume profile. And then looking for support, there is none. There is literally none. This is just easy sell side liquidity. And even here, you have easy sell side liquidity. So there's really not much for price or yeah, there's not much demand. There's no demand actually. There's not much to hold price up for Caspa once you start breaking that low, and it's looking like a very clean Wyckoff schematic on a very high time frame. Invalidation, of course, is taking out this high. That's the clear invalidation. But preferably, if this is a Wyckoff schematic and you see price breaking this low, and also it's breaking back inside this volume profile, it should act a bit quicker. It should put in a lower high around here and then come lower. Okay, but Kaspa not looking the best. Looking like a Wyckoff Model 1 distribution. Break this low is range low. That's what I said on the post. Break low is range low. Invalidation for this, of course, is taking out this high. Take that high with a convincing break and we'll look for a higher low for a higher high. But until then, this is not looking too great. Break this low is range low, and the range low is right here. So I already made a post about this, so not want to spend too much time on Kaspa, but yeah, staying on the higher time frame because that's what I think you guys want me to do. Kaspa, it's not looking too bullish. Okay, from here, of course, once we tackle that range low, we have some demand remaining below us right here. Have some demand remaining below us. But yeah, from here, you just start looking for signs of strength, right? So let's say price does put in that lower high for the lower low. From here, you want to see an accumulation schematic. So maybe it does something like this, wherever you're 1, 2, 3. Okay? We see that, of course, that's going to be very bullish again. But for now, no. It's not looking too great using my TA. Then, what's next? We had Tau. Tau is actually an AI coin that I really like, in case you guys didn't know. And I've been invested in Tau since 80. Yeah, since 80 and 200. Those are my two entries. Unfortunately, I invested more in the 200s than in the 80s. But yeah, those were my two entries on this project. And staying on the higher time frame first, you have bullish weekly market structure. Okay, from the low up, you have a high, higher low, and a higher high, where this is your weekly low. Okay, that's simple. There's really nothing bearish on the chart until you start breaking this weekly low properly, like a good break below this low. And I would also get a bit worried about my positions, but from there, anything can be a higher low for a higher high on the weekly time frame. Then if we go on the daily, we had a very nice distribution. You had your 1, you had your 2, you had your 3. It hit its target. From there, we deviated the range low, and this massive wick was caused by that Binance listing. And as I always say, major exchange listings are short-term bearish and long-term bullish. But you have to realize the people that accumulated Tau right at these lows now have a very easy way to sell because they can sell on Binance. So when the retail people that don't even know how an online wallet works are able to finally buy because it's on Binance, they buy, and the people that invested here sold to the retail persons or people, right? That's just how typically these exchange listings work. So that's why I say an exchange listing like Binance is short-term bearish and long-term bullish. So yeah, we got the retrace from there. And we actually had a very nice Wyckoff schematic here that hit its target and turned into a 1, 2, 3. And from there, we've been going lower ever since. I think we're right now tackling into extreme demand. Yeah. This is your last demand remaining. This daily demand range. This is your last demand remaining before tackling that weekly low, because below this range demand, there's nothing but liquidity. And your main high, as of now, to break is this high. Because following structure from the top down, you have a high, you have a low, lower high, lower low, you wick the high, lower low. So if we start breaking this high like this, expectational order flow would be a higher low for a higher high, and that will continue that weekly time frame structure like this. Let's make that purple. So purple is your weekly structure, and once you start breaking that red structure, that will confirm that the higher low of the purple structure is in. Very basic market structure rules. However, I will be looking for a range to develop, okay? So if we start developing a range here, I don't know how big the range is going to be, but if we start to develop a range in here, I will look for a potential accumulation and then fill more spot positions once I see that, okay? But as of now, the higher low is not going to be taking place if you don't break that high. Again, if you come up from here, if you come up from here and then take the low once more, this high changes to this high. And then you have to break the local high for the higher low and the higher high, okay? But simply, I'm just looking for a range to develop. I like the project Tau, and nothing to really worry about as of now, okay? But I would like a range to develop in here because it has been aggressively sold off for around 70 days now. Let me check the volume. I am on gate. So yeah, we can actually see an increase in volume here. We can see an increase in volume here, and I think because the increase in volume is not at the highs, but it's actually at the lows, that retail is really panicking. Retail is really panicking and selling. And that could be the first sign of strength, because look at how this candle is behaving. It has loads of volume, but we're wicking and we're turning the candle green. So this could be the start of whales actually accumulating Tau again. Could really be the case. Seeing this increase in volume and this candle behaving bullishly, right? But yeah, that's it for me on Tau. Okay. Then we have RNDR, another project I am actually also invested in. Project I really like. I already had some TA on this, but let's just keep it and do it from the start. Let me take a sip of my water real quick, guys. Okay. So, RNDR, AI project, I think related to GPU, power rendering as well. Let's just check the market structure first, okay? Because market structure is just most important. From the low, we have a high. I'm just going to skip past these first points because it's not relevant anymore. Higher low, higher high, higher low, higher high. Or higher high, higher low, higher high. Okay? I wasn't counting properly, but you saw me draw it. Right here, we have very good looking demand. Very good looking demand right here, which is just the range demand from the weekly structure. And since then, we have been creating a range. And I think, just like Pepe, RNDR is actually having a very strong chart as well. Because just like Pepe, we haven't broken any high time frame market structure back to bearish. We have just been trending up on the weekly and on the daily, because your daily low is actually right here. This is not proper daily market structure. It's just a local 12-hour range, I think. But your daily low is actually here. And then, as said earlier, your weekly low is here. Okay. But let's get rid of this weekly low because the range demand backs it up. Okay. And you guys should just remember this daily low is here. But I want to keep the chart clean. So looking at the chart, there's not much for... I'm sorry, but my neighbor's making crazy sounds. Okay, back to RNDR. So looking at the chart, weekly is trending up, daily is trending up, and now we've been creating a range, and we have very clean looking range demand below the range low. So we haven't tackled the highs, we have not tackled the low, so the two extreme points are still intact. So if we sweep the low, of course I'm looking for a potential accumulation to form. It's very typical. We're in an uptrend, so overall I'm expecting the range to be an accumulation because we have been trending up. And we haven't tackled either side. And we have clean looking demand below us. So definitely a long I would consider is something like this, right? I will not take it with a stop loss this big, but if I post a chart like this, it means that I will start looking for longs on this range low. When will I actually long? If we come back down, and we break structure from the low, from the high to the low, back to bullish. We get that sweep of the low, breaking structure from the top down, back to bullish. I will find my long and I will long it up. It's as simple as that. But I am not planning. I'm already fully allocated to RNDR. It's actually pretty early on this project, so I'm not planning on adding more. But if you did have money on the sidelines, RNDR is having a bullish chart, and then we'll most definitely look for longs on sweeps of this range low. Okay. Locally, we had this Model 2 distribution, and that's also why price is having this retrace. But let's check two more things real quick. Let's check the volume in this range. Okay. Yeah, there's not much to hold price up. There's not much demand here, and there's some weak demand there, but nothing significant. So I would really start looking for spot buys. In general, this is a decent area to start scaling in if you're not exposed to the project at all, because we're an extreme discount of the bigger range. This is the premium, this is the discount, and this is the extreme discount. Okay. But a long and spot buys I'll definitely suggest is, a sweep of this low with a structure break back to bullish, coming inside the range, and then you long it up towards the range high, or you just hold it for your spot play in this crypto cycle. Okay. But overall, we're just in a range. Weekly's trending up, daily's trending up. We have clean demand below us. Lastly, let's check the volume and see if we see anything significant here. So on the perpetual contract chart, volume has been decreasing since the price action in here. But overall, if we just zoom in only on the pumps itself, we saw an increase in volume here on this pump. We see an increase in volume here on this pump, and then we see a decrease in volume in this range, which is very typical because it's a range. It has less volume. But yeah, nothing really significant from a volume perspective. Again, seeing a bit of an increase in selling volume at the lows, which is what you want to see, right? You want people to panic sell at these range lows because that's when those wills and the market makers actually start accumulating, okay? So yeah, that's all for me on RNDR. Let's check what did we have. Solana, Bonk, and AVAX. Let's check Solana. Solana is actually a pair that I trade, like properly trade as a scalper. My dear Solana, let's get rid of everything and start fresh. So, on the weekly time frame, looking at Solana, looking at the market structure from the top down of the previous all-time high, you know, we had a high, low, lower high, lower low, lower high, lower low, higher high, higher low, higher high. So on the weekly time frame, this right here is where we actually broke structure back to bullish. And then that right here is where we put in our higher low. So this right here is our weekly market structure low. We have massive support of this whole range demand below us. But in order to get there, you would have to break that structure back to bearish. So for me to long anything, if we start losing that low in here, it will have to take a lot of time. And I do not see that happening. I do not see that happening. Just making that clear. But yeah, we have that weekly market structure low. So expectational order flow, of course, is just simply a higher low for a higher high on the weekly time frame. It's nothing special I'm doing there. Zooming in, we have been trending down on the daily time frame. Our daily market structure, on the other hand, our primary daily market structure, meaning the market structure from the low up, is still intact because your daily low is aligning with your weekly low. This is also your daily low, okay? Because if I'm on the daily time frame, I don't have 2 candles up, 2 candles down in this area, so it's just one straight shot up. Okay? So your daily low is actually also the weekly low, so we haven't really broken any high time frame structure back to bearish. Even on the 18-hour, even on the 12-hour, it's all pointing up. So internally speaking, this is a downtrend on the daily. But at any given time, this can turn into the higher low for the higher high on the primary market structure. But we have been clearly forming a big range here. That is pretty obvious now. You can see it from 2 perspectives, where this is your range. This is actually a proper way to put it. I'll keep it like this. And then we have some supply at the top. And we don't really have any significant demand areas. Right here. We still have some demand remaining below us, actually. So, the higher time frame is kind of the same. It's kind of the same with every altcoin, The higher time frames are trending up, and you've just been forming a range, and you're in the discount section of that range. It's as simple as that. But people just stress because the range is pretty big, so rotation will be like around 40% retracement, right? But overall on Solana, tapping that val now, okay. You have your range. This is your extreme demand, meaning the last demand before you tackle the range low. But you have your range high, you have your range low. They're both still intact. Price is slightly tightening up right here, creating kind of this triangle pattern. And you guys know how I feel about those patterns, right? The first move is always the fake out. Meaning if this breaks down, it's most likely a fake out. So we'll take the low and we can come back in, maybe back test and then go higher or something, right? So we are in a range. Price is tightening up in some sort of way, and we have some demand remaining below us. But overall, the best trades will be a sweep of the range low, breaking structure back to bullish, just like with RNDR. And also Solana, I don't know how deep it is right now. Only around 46%. That's not that deep as for retracement in crypto compared to other alts that dropped 90%, bro. So really nothing to worry about until you start breaking that weekly market structure low. We're in the range. Both of the extreme points are still intact. We're tightening up in some sort of way. And the best play for me for a spot long will be a sweep of the range low, breaking structure back inside to bullish. Okay? That's kind of it for me. If we start breaking that range high, I don't see any. Okay. Let me rephrase that and take that back. We have this daily order block that's actually pretty strong. Why is it pretty strong? Well, it swept liquidity on the left and had a very aggressive move down to follow, right? So it really shows some market maker involvement there. So we do have some resistance around 220. Yeah, around 220, which is above that range high. So for Solana, I would just trade. I don't know where that order block went. The fuck? I would just trade the range. Like this. Not really any clear demand zones below the range low, but we have some extreme demand within the range, extreme supply within the range, and then we have this daily order block above the range high. After that, it's price discovery. Literally, there's nothing to stop price from taking that all-time high. Okay? So this will be my Solana chart. Then let's do a bonk. I know about bonk, but I've never charted bonk. I've never charted bonk. Let me do bonk right here. Bonk USDT. Oh boy. Bonk is not looking good. Bonk is not looking good at all. I actually want to make a post about this. We have a very strong push up with an increase in volume. And from there, volume has just been decreasing, and we're forming a very clean Wyckoff Model 2 distribution. Yeah. No, this is not looking too good. This is not looking too good. The third tab did exactly what it was supposed to do. Sweep all liquidity or hit all supply. And it swept all liquidity. And we're kind of breaking structure back within. Yeah. And we already broke structure on the lower time frame here. No, bonk is not looking good. Let me check the volume profile. Yeah, you're already back inside. Let me see how that developed. Yeah, no. No, it's not looking too great. Not looking too great. How much of a dump is it still to go to that range low? 55% down. We have some support. We have some support right here. I think price will get a bounce from there, But once once you achieve that price point, you will have to break. In order to get there, price will break this main daily structure from this internal low. So I would expect a lower high for a lower low. But yeah, no, this is not bullish at all. Let me make a post like this. Decreasing. Let me. I'm gonna just say here, Wyckoff model to distribution. Bonk. Very clean. Very clean Wyckoff model to distribution. Playing out. Yeah, that's a clean looking distribution. I'll be surprised if we do not tackle that that range low. So that's all I'm gonna give you. I don't know if that's what you wanted to hear about Bonk, but no. From there, of course, once we tackle that range high or range low, it's a free game. It can develop into an accumulation, but for now, it's not looking too great. Not looking too great. Then, lastly, we got AVAX from, what's his name again? Netley McNets. It's a pretty sick name. Neckley McNets. Neckley McNets. AVAX. AVAX is a project I used to hold. Not anymore. Oh. If only it gave us, you see that? I made a post about this. I was looking for a short, but we did not get filled. We did not get filled. Look at that drawing. We just missed it. That's unfortunate. Any sweeps of these lows with a market structure confirmation is high probability long. Well, we clearly did not get that yet. Okay? So, let's delete all of this. Very unfortunate of that short play that we didn't get filled on that. But let's zoom out for you guys. So, following structure from the top down, just to see what the weekly market structure is doing. Ignoring everything up here because that's useless now, right? We had that low, lower high, lower low, lower high, lower low, massive break, right? Absolutely very, very convincing break of structure right there. Very convincing break of structure. So expectational order flow in that sense, of course, would be, after you break that, would be a higher low for a higher high, which is exactly what happened. Now, we had a very clean looking daily order block, and I had that on my chart for a minute, but this was all before I started this X account and my YouTube. So I had that resistance on my chart. Very strong resistance. Let me get rid of this volume profile for now. We had that higher low for the higher high, and we had a nice break, but what happened is we immediately got a very harsh rejection from this daily order block that we had up there, which was weekly wick supply, okay? Therefore, this is more looking like a range. It's more looking like a range where this was just a deviation above the range high. It is actually a valid PO3 where this was your manipulation above the range high. This was your initial range. And then this was the expansion to follow. The expansion took way longer than you would like, but in general, this was the initial dump, right? And this is exactly what you want to see if you want to have a proper PO3 where you can get a proper entry. Because if you did not get filled up here on your shorts, this is the ultimate back test, breaking back inside the range and then dumping. So it is a nice PO3, and we did finally hit the target, I do have to say that the manipulation phase is just a bit higher than we normally have. But it could just be because we wanted this to mitigate that supply zone, right? But very clean PO3 that has finally hit its target. Now, if you guys remember from the beginning of this stream, there was something I really liked, is when you have your big range demand overlapping locally with other range demand. And that's exactly what we have going on here. The top of this range demand is overlapping with this range demand. This is a very strong support zone. If you want to invest in AVEX and you have high hopes of AVEX and you aren't invested in this project yet, I will most definitely long right here and buy more. Okay? Definitely will buy more. Now, looking at this from a range perspective, which it is, we are deviating the range low now. And is this a mitigation is the question. I think it is. Yes, it is. So if you don't have any skin in the game regarding AVAX, I will definitely start filling my spot positions for this project. However, overall, this is just a big range, and it does need time before we can have that proper push up. We have some resistance right here. This is a very important high to break. It's your main market structure high regarding the market structure from the top down, like this. So break this. You can break this significantly, come deep into the supply zone, and then long the higher low for the higher high, right? Because after that break, this is expectational order flow. But the first signs of strength will be once we start breaking hourly structure back inside the range. Let me check where that volume profile was. Yeah. So breaking this high will be your first sign of strength. because then you'll also break back inside the volume profile, right? We do have some resistances along the way, and it has taken a lot of time for this PO3 to play out with a proper distribution at the top. But we are at support now, and we are at very significant support, because if we start losing this low, with a very good daily candle close, I'm not that convinced in this project doing that well. Let me check something. Yeah, if we start breaking this green line, expectation order flow would be a lower high for a lower low. I don't see that happening, to be honest. That's why I'm telling you guys, if you want to be exposed to AVAX, this is a very good place to start scaling into your AVAX longs, okay? There aren't any signs of strength yet, but you want to have skin in the game, okay? Breaking this local high is the first sign of strength. Breaking this high, mitigating that supply, and expectational order flow will be a higher low for a higher high. And then this massive PO3 can turn into a 1, 2, 3, and we go higher from there. Okay? So, I forgot your name. Natalie Magnets. I hope that was enough for you. Mohammed, you are a warrior. I see you commenting a lot. I appreciate you. Brandy, hope you found it valuable. I hope you aren't scared out of your CASPA positions. Lastly, we have PZ. I'm assuming this is not on a exchange yet, because I don't recognize the thing. So let me just search this on Dex Screener. PZ, I think you mean this. A fully diluted valuation of 4 million. Okay, so we don't have that much price action to work with. Let me check. It's very young. It's very young. So, you know, you always have to be aware with projects that are this young. But it is looking like a distribution. Oh, I don't have my templates here. Let's make this a 1. Okay. So we have our range. Is this... What is the high? 1.1422. 1.42. So we have equal highs. We have equal highs. That changes things. Because first I was about to say we have a 1, we have a 2, we have a 3, indicating a possible distribution in the making. But now you have equal highs on a very young crypto pair. So, yeah. This is a range. You don't have a proper range break yet. We have... liquidity waiting below us, and right now we just missed it. Okay. Okay, so, you know, we have a range going on. We have equal highs, so that could be a target, you know. Could be a target, these equal highs. That price will take them. Overall, we are respecting upward structure, right? So we have higher lows and higher highs where this is an equal high. And zooming in right here, we had a nice model 1. So actually zooming in on this little play, you had your range high, range low, first sweep, second sweep. So you really see where this is your target, and now you're breaking the high. So the fact that we're breaking this high, yeah, the fact that we're breaking this high could mean that this will be the higher low for the higher high on the higher time frame structure pool, right? I don't know why right now it is showing as a sweep of the high. I don't know what that's all about. On the 2 hour, you have 143, 1422, and on the 8 hour, 14. Okay, so the highs kind of change when I change time frame. If it's equal highs, you know, we just had a local model 1 accumulation. We are breaking structure from the top down, so this could be the higher low for the higher high. If this is indeed a sweep of the high as we see on the lower time frame, I will definitely watch out for this supply zone here, because that could be the lower high for the Wyckoff schematic. Okay? So watch what happens in here, but it's a very new project, right? It's a very new project. It is respecting smart money concepts though. So that's pretty impressive for a project that's this tiny. It shows smart money involvement, of course. But we have some liquidity below, so if I just had to use my TA, let me pull one thing. Why is it not showing? Okay, so that's not showing. Okay. If this is a 1, and this is a 2, and this is a 3, I will definitely watch out if you see structure break back to bullish, tapping in this supply zone, because in that case, we could have a full rotation back down all the way to X marks the spot. If these are equal highs, you know, you are breaking internal structure from the top down right here. So we could tackle this high again, and from there see what happens. But it's a very young project. It has a 4.2 million market cap and only 250k liquidity. So yeah, this is a scenario, and then of course this is a scenario, and then this is a scenario. Those are your 3 scenarios for peasy. Now, I wanna, let's see, how long have I been ranting for? An hour and 30 minutes. Oh, damn. Okay. Let's see. Do I want to end it with a coin? Let's end it with ETH versus Bitcoin, right? Let's end it with ETH versus Bitcoin. So I've made a post about this like a while back. Literally, I've made a post about this. When was it? Like a month ago. A month ago, I made a post, and I recently reposted it on X, and it's about Ethereum versus Bitcoin, and how we had a beautiful Model 2 distribution here that hit its target, which was this range low. Okay, it hit its target. And from there, right underneath that range low, we have beautiful range demand. And when I tell you, I have been waiting for this range demand to get tapped since literally December 2021. You can ask my friend, bro, Franzo, bro. I've been talking about this range demand for literally 3 years almost. Okay? I'm not kidding. For almost 3 years now. And we finally tapped it. So we're just in this range on ETH versus Bitcoin, right? And we were hovering around that range low area, and we were wicking the low, trying to break structure back to bullish, but instead of it being a break, it was just a fake break to tap into supply right here, and then we dumped from there. Also, this not being properly weekly market structure because it's only one up candle, right? So it's kind of just a range that we had going on here, and we just deviated the range high just to tap supply and go lower. Why? Because there was still a reason to come lower. because we still had this range demand to be mitigated. Okay, it wasn't mitigated yet. And what we did from there, if we extended, price came back down, and we finally mitigated this demand after 3 years of waiting for it. And the move followed after that. Mitigation was very significant, right? If you go on the 3-day, we can clearly see that. Oh, wrong tool. We can clearly see that we broke structure back to bullish very cleanly. Okay. We don't, on the other hand, we don't have acceptance back inside the volume profile. That is really the next step. Okay. For a proper range rotation, talking this from a range deviation standpoint, we need to have that break back inside the volume profile to confirm a proper rotation, okay? Otherwise, if you don't get acceptance back inside this volume profile, a rotation is not happening, okay? It's just not. However, we broke structure back to bullish very significantly. So, of course, expectational order flow is a higher low for a higher high. When is the higher low for the higher high going to take place? Once we start breaking structure from the top down. What is the structure from the top down? On the 4 hour, let me see. This was a very fast move down. Let me just do it like this. Actually, kind of here. Yeah, so actually on the 4 hour, you broke structure already. Right here. This is a clean demand mitigation. But then on the 4 hour as well, you broke it back to bearish to mitigate that demand. Let me see if there is a higher time frame. On the 6, it's not that valid anymore. It's giving me some sort of an accumulation vibe right here, because I see us rounding up, okay? Kind of see us rounding up. And the way we mitigated this demand coming higher, it's kind of, maybe this was your range, and this was your initial range low, and this whole local model 2 was your second tap, and then this is the break above, and then this is your third tap, and from there we tackle the high, right? And then if we start breaking that high convincingly, that's when we can start talking about a full-on rotation. But for now, this doesn't have to play out, we can just give it some time. We have demand all the way down to here, right? There is demand all the way down to here, so let me see. Yeah. And we have inefficiency to fill. So it doesn't have to get filled. I'll prefer it if we didn't fill it. But still, if we do come here, expectational order flow, still higher low for a higher high. But this would be the ideal play to have that accumulation here and tackle the range high from there. Because if we just check on the 3-day, guys, if we check on the 3-day time frame, we have been downtrending on the 3-day ever since we broke right here. So that this is our 3-day structure. That broke back to bullish after 622 days of being in a downtrend within this range. Besides that, we left a beautiful liquidity curve. So once we put in that higher low and we start breaking this high convincingly, getting acceptance back inside the volume profile, bro, this is going to squeeze. It's going to squeeze very fast. But yeah, I'm pretty excited to see what's going to happen on ETH Bitcoin. But for now, we have broken 3-day time frame after 622 days. And for the people that don't understand ETH versus Bitcoin, if this chart goes up, it means ETH will outperform Bitcoin, right? meaning if Bitcoin goes up, Ethereum will go up more, and your altcoins will go up the most. So it's very good if this chart goes up. It's very good for your altcoin portfolio. So that's it for me today. I'm glad to be fully back behind my setup and my mic and everything. So quality posts are on their way. I love all of you guys. I appreciate the massive support I've been getting recently. And yeah, let's crush these markets together. Literally, I wish I had someone to guide me properly, when I was getting started, because that's just something that's really missing in the crypto community. You have a few guys out there that are extremely good, but there's also a lot of nonsense out there. So stay aware of the content you assume and the ideas you believe because of a certain person. Always doubt it. Always do your own research. Also regarding me, always do your own research. And I'll see you guys tomorrow. Peace out.